Hey traders, Raghee here. Welcome to Charts and Coffee. Great to see everyone. I got a tiny mug today. Lots going on here in the office. I got the tiny mug of coffee, pacing myself. We've got Apple earnings. Also, good reason to maybe regulate the caffeine on Apple's earning date. We're still in tail wags the dog mode. So we're going to be managing our caffeine input, but caffeinating and dominating all the same. Great to see everybody. Happy Thursday. And you know what I'm going to do? Without any further ado, we're just going to jump right in to the questions. I'm just going to get these notes and everything out of here. And yeah, we're just going to jump into the questions today. There's not a whole lot to talk about this week because everything is just earnings. And oh yeah, we have GDP numbers, and oh yeah, we have PCE numbers, but really everything is just about that earnings narrative. So, still got the hair up. Well, you know what? I'm going to leave that up today. So the big decisions that need to be made. All right. So thanks as always for being here for the show. And let's just jump into the question, shall we? All right. So Gwen kicking it off with thoughts on Mondelez. Sure, let's jump on over there. All right, thoughts on Mondelez at volume ledge. All right, let's talk about volume ledges. If I'm going to talk about that, we need to jump on over to TradingView. All right, so let's do that. Okay, so if we're taking a look at Mondelez, and I'm gonna basically anchor this view to the very beginning of this year, and the question is, it's a volume ledge, previous Darvis support, right? So how do you use that Darvis? I mean, take a look at this back in here. Right there, you can see this area of previous Darvis support right in there. And what I'll usually do is just color it, whatever the most recent is. So I know this is a Darvis level that I'm looking at. Beautiful. Not a huge ledge, but definitely you can see we're getting into an area of support, not only from a price-based pattern, Darvis, but also from the volume ledge perspective. The JT multi is though neutral, and it has been since the end of March. So we have a choppy sideways market. What I would prefer to see here is some sort of oversold signal. I would love to see an oversold stochastic. We're nowhere near that. We're coming, we're on the heels of earnings. So I would give it just a moment. I think you have a few things out of sync and a few issues like the earnings hot zone still very much in play in terms of volatility. So maybe just tap the brakes on this. But Gwen, to your point, sometimes a single market, single stock can get us looking in the right direction, get us curious about something pertinent. When we talk about Mondelez, I can't help but think, all right, what else is going on within the XLP? And do we have anything that's double green? We're not lacking for double green, Gwen, in the XLP. This is relative outperformance, outperformers. That's what we're always looking for. This is the easiest way to do it. I mean, there's just no easier way to understand when I take a look at a group of stocks that we know have a relationship. They're connected. They're connected by way of belonging to this club, and this club is XLP. So when that's the situation, then you ask yourself, where do we have earnings in the rearview mirror and a double green? And we definitely have a lot to like within that one. So thanks for the question, Gwen. All right, next up is Facebook. So, when we talk about something like Facebook, all right, here we go. Take a look at the structure here. Now, I have the pre-market turned off on this because the hourly price movement range tool, the volatility, time and volatility, support and resistance that I use works better on stocks when we don't have the extended hours. But if I'm looking at this thing, it's hard for me to get super excited about something that's, so weak to begin with. Did it have a moment? Yeah, I'm sure Zuck's made about $50 billion yesterday. Good for him. So we're going to open up around 199. Does this change the downtrend? Probably not. Does this get us through 200? We'll see. Does this get us over this Darvis high around 230? It doesn't. So I actually don't see what's happening on Facebook to be really a needle mover. Just because the market's moving doesn't mean that it's going to be at a level that I want to do anything with. So would I buy Facebook? No way. I'm not interested in any way buying Facebook. The question I have, Peter, and great question, is if and when I can short it again. That's it. That's it. So it may not be that interesting as a short, but I'm not in any position by looking at the red over red, red grab candle, still below significant Darvis levels, like 230. There's nothing here that tells me we've broken through some sort of a level that's really going to change minds about the follow through we're likely to see. I think it's going to be overall faded. We'll see what happens. And the fade, meaning sell into resistance levels, sell into that strength at a ceiling. That's still where my head would be at. All right. Thank you for the question, though. I'm sure a lot of people are wondering very much the same thing. Furman asks, AAL for a possible buy. Yeah, take a look at the structure. We've been double green since the 21st of April. To your point, green grab candles. We're north of the 200. I'd keep an eye on it. I definitely keep an eye on it. I think it merits at least something around the 18 area inside the wave. And then if you want to make sure you're not, alone, as I like to say in the trade, which we never want to be alone, ask yourself, what kind of volume ledge action are we dealing with? So from a volume ledge perspective, support and resistance based on volume and price. 1880, I'd keep an eye on 1820, 1825 as well. All right. Thanks for the question. Kevin asks, this volatile environment is creating a high VIX, resulting in higher relative premium pricing. Okay, let's jump on over to the VIX. So I use VIX futures, by the way, gang. So you'll see me pull up the VX futures, resulting in a higher relative premium price. Has this changed my philosophy of mainly buying premium? I never change on that, Kevin. So the VIX is not going to keep me from doing what I do and have done for a long time. And I love the question. No one's ever asked me that, Kevin. That's a great question. So no, I'm not going to change my mind, because remember, implied volatility is going to contract and expand throughout a day, throughout a week, throughout a month, throughout a quarter. So we're always going to be dealing with just this fluctuation. The best way that we can deal with a high volatility environment, which of course then is going to map to higher implied volatility, higher cost, right? Of course. But the best way we can do that is always stick with the basic, and you know what? Where's my favorite little image here? The basic, and when I say basic, I do mean basic. I mean simple. I mean straightforward. We all know this. Keep buying the options on sale. Keep buying the options on sale. And what that reminds us is that, yes, while the volatility may be higher, there are still going to be moments where even this high volatility option is going to be a better deal. And remember, high volatility works for us both ways, because if the market continues in the direction that we are favoring, we'll also be able to profit from that. So great question, because one of the things I think traders do chronically in their options trading is they chronically overpay for options. And so we try to minimize as many of those factors as possible. So buying things on sale is even more important, than ever in an high implied volatility environment, a high VIX environment. So great question. Thanks for that, Kevin. As always, love all the content. My pleasure and the mastery. My pleasure in my job is what I always tell folks. Thoughts on gold? I'll tell you what, gold has been tough. Gold has been tough, whether that be the GDX, whether that be the GLD, whether that be the GC. I am overall bullish gold. It's sitting at an oversold level, but here's where I'm at. Basically, I don't have as much edge. Literally, it's not a trending market. It's not a trending market. So this is probably GDX was, and I did get paper cutted out of that. GDX and GC are probably the only non-trending positions I have in my book, and the only non-trending positions we have in the mastery. And there's a couple of adaptations we make to deal with a less than desirable structure, which means less than desirable follow through, but still a potential to control risk. And there still could be a decent trade here. We're not talking low probability. We're talking just a less, from a relative performance standpoint, trends are always going to outperform chop. So even if we're at the edge, like we did in GDX, like we did in GC and GLD. So the thing is, we deploy less capital, 25% budget versus say 50 or 100% budget. We can even keep a tighter stop. One of the things I teach our mastery folks is we can ratchet in what a paper cut should look like by saying, look, we're playing a choppy market. We've got the oversold low, but we maybe reel that in a little bit in terms of potential risk. So those are things that I focus on. So I don't know that I would persist in this market, RF. What I really want to do is let's just get past Apple and Amazon earnings. Let's get past GDP and PCE. And this week, when we have the just giant tech releases, I'm usually fairly inactive because these stocks in tail wag the dog season can make significant shifts to the indices. So ultimately, what we want to remember is it's okay to be a little less active on a week like this, but use this volatility, whether it be last week's, sort of commodity crushing, inflation crushing pullback, whether it be this week's volatility, use this time to rebuild the watch list. And as the dust settles, ask yourself, okay, what's emerging going into May as relative outperformance? Because even though we got stopped out, and after a pretty long run, we got a steady stream of getting stopped out of a handful of positions, and that's part of the game. But these were also positions that had wonderful trends going into April. So from March to April, we still knew we had the commodities inflation trend very much intact. And so we built a watch list around that, and it was a very productive watch list. Now, we're going to rebuild that watch list. I think those of you that have been following me here at Charts and Coffee or over at the Sector Secrets Mastery, I thank you as always. And thank you again for the support. Thanks for all the smashing that like button. Thanks for the questions and comments. I really do appreciate it. I read them all. I read every single one of them, even the trolls, which we really don't have. You know what I love? Every now and then we'll get a troll, and then you all just pounce in. So I love this simpler community. So what I know is going to happen, and you all will see it happen and evolve here show after show, is our watch list is going to look different. If you're in the mastery room, you already know our watch list is looking different. We've got shorts and financials. We're going to start to reconsider where the trends are at, because a few months long trend in commodity inflation names got undone in less than 3 sessions. That was dramatic. So if you're wondering, whoa, what was that bust that just ran me over? Look, same thing here. It happened quickly. It's not as if we had some stall candles and inside days and a longer prolonged distribution. This market went nope. It was a big cup of nope move. This cup and handles, I don't use those. We had the big cup of nope pattern. And so now we're going to reconsider what's going to be viable going into May. So thanks for the question. And I would not persist in a lot of gold or miners, things like that. So thanks for bringing that up. It's really important we make sure we clarify the refocus going into next month. We have a double bottom in the SPY or the QQQ. And I think we could argue there's a triple, quadruple, quintuple. We got a lot going on here. Look at the volume ledges, right? Look at the volume ledges. Look at the lows. This is a soft bottom, though, meaning it's not solid. Solid meaning the lows are with very little variation from low to low. It's a tighter tolerance. When you have a wider chasm between lows, it's softer. We're not really sure precisely where the buyers are going to step in. They could have stepped in as high as 422. They may step in at 417. They may wait for this Darvis down at 410, right? So we have a wider range. So it's a softer zone. But I agree. It's definitely getting oversold. On Qs, again, you have a volume ledge around 320. We have double Darvis levels around 318 and a half. So that area there could have some gravitational pull. And then if we just look at this through the toss charts here, do we have an oversold stochastic? Yeah, we've dove below the 20. We've absolutely dove below the 20. We're still in a neutral market too, gang. We're still in a yellow neutral market as well. So when I did the video Tuesday, I said, hey, we could see a bounce form in this area. I still have that same opinion. I'm not saying we're going to turn into an uptrend. I'm talking maybe a 50% retracement of the last major move of the range that we're in. So thanks for the question, Josh. All right, moving on. Hey there, student. When daily and weekly candles conflict on my indicators, which do you go with? I don't really pay attention to weeklies for setups. So I'm not really, it would bet, student, an example would be better. So when you say candles conflict, I'm not really sure what you're referring to. Are you talking about the grab candle colors or support and resistance? But so you have a trend Momo bullish on a weekly, but bearish on a daily. So I really don't care as a general rule. There's levels on the weekly that I pay attention to. Some of you that took my recent day trading class, that would have been last year, so not recent, I guess. But the last one that we did about a year ago, I guess now, we factored in a number of levels on dailies and weeklies to help us with sentiment. And that's carrying over to this year. But when I'm setting up a trade, I try to actually avoid the weekly for a setup, because the weekly becomes dangerously a time frame that a lot of traders will adopt when a setup on a shorter term time frame, maybe it's a 4-hour, maybe it's an 8-hour, maybe it's a daily, isn't quite moving the way they want it to, but they want to justify holding on to the position. The weekly says, sure, I'll be your huckleberry. It's a very tricky thing to start being that fluid in time frames. I'm actually not a fan of multiple time frames, and I'm not going to really ever presume weekly psychology is going to eclipse daily. Daily is the most important. So weekly might give you some levels, weekly might give you some sentiment, but that as a general rule does not concern me. In fact, the weekly for me, those of you that are in the mastery know the weekly's role for us is more long-term portfolio, position trade, something. And you might say, well, Rog, what does that mean to you? Something that I'm going to hold usually a minimum of 6 months, 6 months or longer. We get to months to years. Weekly is a really good time frame. But when we're talking about days to weeks, I don't care what a weekly is really doing, to be quite frank, unless the weekly is hitting a Darvis or a volume ledge, in which case it's just giving me a little bit more insight into support and resistance that I'm probably going to see on the daily anyways in some form or fashion. So thanks for the question. Yeah, that's a good one. That's a good one. All right. Is XLE, the trend in XLE officially broken? And yes, the answer would be yes. Because we've had 2 red grab candles, we've broken the wave, we've gone yellow on the JT multi. There's no dips to buy. Correct. So when people talk about buy the dip, I guess everyone's going to have a different definition. But I'll tell you what I know works, and I'll tell you why dips really should be synonymous with retracements of uptrends. It's what works the best. Most traders don't know what buy the dip means. And I see the phrase used a lot without emphasizing market structure first. In chop, it's not a dip. It's overbought, oversold. In a downtrend, it's a rip. It's a sell the rip, right? We rally into resistance. In a downtrend, it's a short. And in an uptrend, it's buy the dip. But I'll tell you, not 2 in 10 traders will differentiate the tactic according to the underlying structure, because not even 2 of them will start with structure. You all will. This is why you're going to ultimately have an edge over most traders who do not start with a really simple, we make it color-coded, right? Really simple color-coded way of saying, is this chop? Or is this an uptrend? Is this a downtrend? Or is this a narrow sideways channel? Chop, channel, uptrend, downtrend. That's always the first decision we need to make before we deploy a strategy or start to use an indicator. So good stuff. I appreciate that. Really good question there, Michael. Really, really good stuff. All right, gang. And just like that, we are out of time. I'm going to head on over into the rooms. I'm going to be doing the first hour of the morning. I will see you all tomorrow. Same time, same station. Thanks as always for joining me for Charts and Coffee. Caffeinate and dominate, gang. Be good to each other.